Hey everyone, this is Jordan, and this video is being recorded on Thursday, March 3rd, 2016. And another concept that I want to talk about that I detail in chapter 1 of my book, and I just want to expand upon, is the concept that the real driving force, the real fundamental driver for gold is negative real rates. And we showed you the chart in the recent video. There's a strong correlation there. And in between that is investment demand. And I mean, you have different types of demand for gold, but it's really, when you talk about negative real rates driving gold, it's driving investment demand, and that's what drives gold. And this chart here, which is in my book, I believe this is from CPM Group. It's obviously almost 10 years old, and it's a little difficult to discern, but essentially what it shows is that in the years where there's positive investment demand for gold, gold goes up, and then when investment demand contracts, gold goes down. I think the red is showing when investment demand is positive, and the line is showing, the black line is showing the percent change in the gold price. And there's a few people who've been talking about this, which I would advise listeners to spend time following. And those would be Pierre Lassonde, the chairman of Franco-Nevada, who's a real legend in the business, Bill Fleckenstein, and also Dan Norsini, TraderDan.com. I'm going to be interviewing him tomorrow. I've done a few interviews with him in the past. And I wanted to talk about that because yesterday, Kitco, they have a bunch of interviews from recent conferences at Kitco.com. You can also watch the videos on their YouTube channel. And they had one with Pierre Lassonde. And Daniela was asking him, what's really driving this? And the two things he mentioned, he said it's negative real rates, and he said watch the GLD. And that's something that Bill Fleckenstein has been talking about, and also Dan Norsini, because when you're looking at investment demand, it's really the Western-based investment demand. It's not physical demand or Chinese and Indian demand. It's really big, big money, Western money, in other words, that's driving gold, and that shows up in investment demand, which shows up in GLD. And I'm going to get to the next slide, and just to point out again, Pierre Lassonde, he mentioned that in the interview. He said just watch the GLD. Dan Norsini, TraderDan.com, he's been talking about that for years, and Bill Fleckenstein has also been talking about that. I hope I can interview him at some point soon, but I think he's even been saying that that's more important than the COT, the Commitment of Traders report. So here in this chart, we have gold at the top. This is a daily line chart of gold. And in the middle, it shows the amount of gold in the GLD. And then at the bottom, we show the rate of change over 22 days and 66 days. And essentially, we're showing a 1-month rate of change and a 3-month rate of change. Those are rolling rate of changes, of course. And you can see, again, that's a 1-month rolling rate of change and 3-month rolling rate of change at the bottom. So that's a quarterly rate of change. And before today, that's up to 20%. I mean, that's the highest since 2010, right before QE2. So we haven't seen this kind of demand for gold, at least investment demand, and it's being driven by negative real rates. So, just put all these factors together, and I really want to advise listeners, focus on negative real rates. We've seen a major turn in the market, and also focus on GLD because that's where the investment demand is showing up. And again, investment demand, that follows negative real rates or declining real rates. And so one way to track investment demand is in GLD. And you can see here, GLD is actually at the highest level. The gold in the GLD is at the highest level since the second half of 2014. So looking at the gold price versus the gold in the GLD is outpacing the gold price. If the gold price was at the same level, it would be in the maybe 1330, low 1300, something like that. And we see gold breaking out of its little triangle consolidation, and the next target is going to be 1300 in my opinion. But again, just to summarize, focus on negative real rates and declining real interest rates because that's what causes the big money, and we're talking about Western-based money, to desire more investment demand. It's a bad way to put that, but in that scenario, Western money, big Western money, they accumulate gold and it shows up in the GLD. So continue to watch that. I'm not the first person to say this. I'm just piggybacking off against some very, very smart people in the industry and business. Again, Pierre Lassonde, Bill Fleckenstein, Dan Norsini. Thanks everybody for watching, and you can follow more of my work at thedailygold.com and subscribe to my YouTube channel, and also check out the Palisade Radio YouTube channel because my market updates are on that channel as well. Again, you can get my book for free. Go to thedailygold.com/book. Thank you everyone for listening and watching. I wish you all the best, and I'll speak to you again soon.